Well, we have a lot to go over between PPI, CPI out tomorrow, what happened with Oracle, and what's going on right now. I think the most important thing is just look at the fib levels from the break of non-farm payrolls on the NASDAQ, and then we'll do this with the S&P. Then we're going to get into the movers and shakers and what I see happening out there, because there's definite patterns that I can show you that can help you stay out of harm's way. And I'll give you a couple examples today for sure on where the money's flow seems to be going, but let's get into it. So we just look at the NASDAQ, NQ. We pop up, and then we all know that we popped up on that really good print on PPI. So producers price index is what producers pay. Consumer price index is what we pay. If you think about it this way, we go and buy a burrito, that's CPI, to the ingredients of the burrito, or PPI. If PPI is lower, then CPI should be lower, and in tandem, CPI is tomorrow. Now, we see the move, and then we can just see from there at 8:30 over, you hit it at 10, and then we finally cracked it. So once you see these crack, they pretty much hold. So you can see this in here, test, retest, and then eventually the crack. That's pretty much it. Pop goes the weasel goes pop. I would say that you didn't really fall apart. You just kind of drifted, and it really wasn't this huge percentage or down move. What I would take from it is that you just didn't rally. I don't think that's a big deal considering what happened in the market today. This was definitely going to be a seller's market when you had this kind of move. And if you take a look, you'll see the same exact thing here on the ES. Now, before we get into this in greater detail, you're at the same levels. So you have your non-farm and you drop fibs from the non-farm, and then you come across and you can just see how you're just bouncing and respecting those levels. You really have not fallen apart here. Now, clean this all off for a sec, drop it to a daily, and then just take a look. You pop over and then they just pull you back. It's not the end of the world. SPX, same thing. You get over that 6,500 and then they pull you back. It's really not a problem. I don't really view it as one. I really don't view it as something that I have to panic about. What I would say over this that I think is the most important part of today, whether you're red or green, is that you got a new closing high. No matter how you look at it, that's what happens. Sometimes to just see the forest through the trees, what I will do is just go back to the old school open, high, low, close and just go, okay, what's going on here? Because sometimes we get too caught up in, oh, it's a doji and it's this. And I do it as well, even 26 years of doing this. But when you roll it out like this and look, it's like, oh, okay, so we opened up and then we sold down a little bit, but that's still an all-time closing high, right? It's a little bit different of a feel to it. As always, subscribe to this channel, click all notifications. These videos come out at different times, and even yesterday I was not able to do one, so I was able to actually make this one a little bit better and come out at a different time just because of how busy I was. And if you want to follow along, which I would suggest that you do, I would subscribe. Anyway, if we get to this and we look at what we're dealing with right here, the little pop over, and now we're back. If we did the simple things before we begin and get into the breadth of the market, we're seeing exactly what we talked about on Saturday's video. And I would still watch Saturday's video because it's playing out exactly as we said. You're just kind of grinding in here. You're not winning. You're not losing. You're just moving sideways. Now, tomorrow we could see rotation because CPI comes out. And when CPI comes out, that could move us. But right now, what are we seeing in here? You're just trotting right along. Why are we not breaking out? Because we're rotating. And we pointed this out in Saturday's video. You are rotating not only from sector to sector, other sectors are outperforming right now, you're rotating within sector too. And that leads to a flat line on these numbers, but it doesn't mean that we're actually not going higher. If you look at the new highs, new lows, they're actually doing fairly well. Now let's take a look at CPI. Now, instead of looking at just everything else, I'm going to show you what one of the investment banks is saying about CPI so we can just dive into this. And they're saying the core CPI month over month print, and they have their own belief on it and what's going to happen. But the way that they are viewing it is if you have a 5% of the core month over month being above 0.4. I would actually say it's lower than that, but if it comes in at 0.4, you're going to lose 1.5 to 2%. If you become between 3.5 to 4, you lose 0.5 to 1. So this is always like a really good gauge on what's going to happen. And it's fairly accurate. But what you're really looking for is the skew. So in other words, when you get to 30, 35, 25 to 30, you'll note that the skew starts to change to the upside. And why is this important? So 25 basis points to 50, this is still skewed to the upside. So you take 35, 30, and 5, add it together, and you will see you're skewed. Now, why that's important is, and you'll see it right in here, touch lighter than usual, say, which is usually a 125 move. They're saying 92 basis points. But we're skewed to the positive upside because of Jackson Hole. After you came out with PPI and PPI fell apart today, it actually came in at -1. For time's sake, we're not going to get through it. I'll probably cover it in Saturday's video, but I wanted to make this video timely because there's a lot going on in pattern recognition out there I want to get to. You need to just take a second and just think about this. We'll go over it publicly in the pre-market, and I'll make sure I'm live tomorrow publicly for the pre-market. But to me, I think you have a much better chance at seeing 50 basis points if this comes in lower. And the way the PPI came in, man, this could be something tomorrow. I'm surprised and wondering how much was built in here. And what I mean by built in, the fact that the home builders are not going up on this, I think it's presenting a huge opportunity. If you look at how the home builders are sitting and then how they moved today, just the fact that you didn't go up to me is kind of crazy. But really what you did, always look at the bodies. You're coming down, you're doing the undercut, but you're not really breaking. I am pretty surprised that on that data, that was the one thing that was holding you back. And that piece of data came out really well. The one thing that was holding everyone back from thinking, are they going to cut? Are they not going to cut? Was going to be that number. So I am a little surprised by that. I am surprised that KRE didn't rip. I am surprised that those numbers didn't come out the way that they did. Is it geopolitical tensions or tensions? Yeah, I don't think that's really going to do it with the retail. So we're going to need something else. On the tech side, I get why we sold off. It was an enormous move if you were long these names and you really want to sell into it. And this was going to bring me to what I note as the first pattern in a second here. But there's two very specific patterns that I'm noticing that are going on that are very different. It's more of range-bound trading. Now, I'll explain in a second. But if you're looking for these names, I would have expected them to have lifted. Now, the hood to me, you came out, you hit a new high. This was really good news, but you reversed. If you look at Sophie, that should have gone higher today on that news. You made a new high and then you reversed. So how much of this is baked in on CPI tomorrow? I really don't know, but I know this. We'll find out tomorrow. Let's talk about the first leg of the stool with Oracle. We all can see that Oracle rallied up substantially. You closed at around that 240-ish level, and then you opened up, and you wound up opening at 320 and closing at roughly 330. And I just want to go through a couple things here that are super important because a lot of people really didn't catch this. All they saw was the miss, and they didn't really dive into the numbers. For those that don't understand the stool, it's fundamental side of the market, but you go macro, fundamental, and technical. Think of 3 legs of a stool. Okay, I'm not going to grab the graphic because it's going to mess up my other graphics right now. But this is something, and if you're in the community, you saw this last night when I did this while it was going on. And this is important because people did not get this. And it gave us a huge opportunity. See, when you understand the fundamentals and other people don't, it gives you an edge. There's huge edge in fundamental right now in this market because everyone is so heavily leaning technical. But what happened here was everybody was looking for 31% growth. So let me grab this one graphic and drop it in really quickly so you can see what I mean by this. So this is by Citigroup. And what Citigroup did was walk through and say, all right, here is the growth that we're looking at. Here's total cloud revenue, year over year growth, 31%. And I do try to do a video every single day, guys. I haven't missed many in the past couple years that I've been doing this, but last night was it was absolutely insane between the conference calls and talking to people. But, I do try to do them every day for those that are newer here. But when you see this 30%, just remember this total cloud revenue growth year over year. They are looking for 31%. That is the consensus. Citi was saying we're thinking 30. Forget the numbers for a second. Just remember the growth rate because this is where people really screwed up on the call. And when they were selling, we were buying. And this was why. When you start looking at what they were actually doing, the backlog now is at 359% for $455 billion. If you look at that 31% number, what Oracle said is they expect their infrastructure revenue to grow at 77% to $18 billion. I just showed you a number where they said it's supposed to be what? 31%. So now they're telling you it's going to be 71%, even though consensus was 31%. This is where it gets really wild. If you look at this fiscal year, that means the previous quarters that came in at 31%, what do you have to do to get to the 77% number? And this is where it gets super interesting. Everybody's looking at the headline that comes out. If you look at the cloud infrastructure that came out, it was 55% versus the 31% that was supposed to come out that was higher than last time, but you now have what we refer to as sequential quarter over quarter growth. And that's what the sequential growth is doing. It's actually lifting. So the growth is actually getting stronger, which is the exact opposite of what's happening to who? NVIDIA. NVIDIA is actually declining, even though it's still going up. On an absolute basis, it's going up, it's growing. But the sequential growth from quarter over quarter on data centers is dropping. That is the exact opposite. So what we're seeing is, and we've seen this through, different stages of tech, you're going from compute to connectivity. And that connectivity we saw from where? AVGO. And this is why for those that are in the community, and I did go over this on Saturday, this is why we started buying Oracle right after AVGO's earnings, because it was very clear that you were going into more of the connectivity space and the application space, which is the third phase of this whole AI cycle. I don't want to get into all that now, but just understand there's phases to this, right? So you have the computing power. What do you do with it? Well, you have to operate something. All right, so now you have a data center. You need a software. If you just start thinking about it from a laptop perspective, if you have a laptop, you need back in the day, you'd have an Intel chip, you'd have a Microsoft Windows base, and you had a Dell computer. Think of it as NVIDIA, Oracle, and AVGO. They're now your Windows from Microsoft, your Intel, and your Dell. If you think about it that way, this makes a lot of sense. So now they need this, and they need AVGO because they have the computing power. Now they just have to connect everything, and they need a platform to run it on. Hello. So what happens here is the growth of this cloud infrastructure is going up and growing sequentially. This is exactly what people refer to as their, quote, NVIDIA moment, where people are going to go, oh, I get it. The sequential growth is not over. The CapEx has just moved on. Right. It's moved on to Oracle. And people will get this as time goes along. They made it very clear last quarter, but a lot of people weren't paying attention to it. So think about this. If you're going to grow at 77% this fiscal year, and you're at 55, what does next quarter have to be on the sequential growth side to even get to the average of 77? If the last one was 30, this one's 55, what's the sequential growth going to come out at next quarter? If you think about it that way, it just shows the amount of growth that this massive, massive company is going to have. And I think that's really important. And what you'll see when you look at this last night is just the initial move was right here. And you can just see it. It was absolutely, just get me out of it. They missed. Watch it on a 1 minute and how fast it was. And that's just the algorithms. And they see the number and they see the mist and they just act. And it presented a huge opportunity. And literally, people know, but if you're in the room, but it doesn't matter. When you flipped and you went above the close, that was it. And if you knew what to read, this was a super easy trade. By the time we were done in here, you knew into the call that it was going to go higher, and they explained it. Whenever you're on a conference call and you listen to this conference call, and I would strongly suggest if you take one thing from this, if you're listening to a conference call and the analysts are giddy like they were last night, they're going to talk very positively about the stock the next day. It's almost like a code where they tell each other, congratulations on a great quarter. Like that's literally the saying. And then the next day they're going to be very, very positive about your stock. So there was nothing really to be negative about here. I cannot stress this enough. It doesn't mean you're going to go straight up. Clearly, you're going to bonk around, and you're going to bonk around a lot. But overall, I think you're in pretty decent shape here. It'd be very interesting to see how this closes on Friday. I would prefer it to pull back and get smoked so I could get involved. But as people start connecting the dots, you can start seeing the AVGOs of the world. And you can start seeing now we're at 368, they told you back here when they were buying what? $10 billion of their own stock back. They told you why they were doing it. You just had to listen. And here we are. But just absolute monster move, monster quarter. And it does make sense as they're connecting the dots. But the money flow that's where it's going. This is where it's going now. Pattern recognition. There are two very specific patterns that I'm picking up that you could use right now. Number one, I'm going to take IREN and this level right here. I have a position in this. We put it, just FYI, we bought it as an alert down in here, like 26 and change. You see where you broke out? This is your initial bar on the really good news, right? Then you're going sideways and then you broke out and now you're lifting and pushing. All right. And that's obviously why. And you could just see how you held that call wall right there and just flipped it and went. Why is this important? Because you're seeing the same pattern everywhere. They're coming off with a catalyst, but the same pattern. You're breaking out and you're retesting these levels. This is not something that's been happening a lot in the past. So you're breaking out on earnings and then you're basing and then you're holding that low level and then you're going. And you're seeing more and more of this. I'll show you AEO. And this was something, again, that we've been talking about for some time. There's the stool. I have it on the chart right there. There you go. And you can see this pattern right here, up, down, 1, 2, 3, up. For those that don't know, that's a rising 3. It is the most predictive pattern of all the candlestick patterns out there on any basis, on any percentage basis. Not from movement, but from prediction of which way you're going to go, up or down. So when you see something like this, why? What did it do? Well, it came right back down to what? And I'll clean all this off so you can see it cleanly. But you came right back down again, tested this area, tested that open, and you held. As long as you're in this bar, it's the same thing as IREN. And you're seeing more of this, the breakouts, the retests, and then the gap, not gaps and goes, but then the go. They got positive news by IBD today on stock of the week. Well, where were they at $12? Doesn't do me any good now, does it? That's why I always tell people, do your own research. I want to point out this other pattern that I'm noticing a lot more too. Instead of moving, you're trending, meaning you're staying in the same range. And I think that this one's most important out of all of them. What I mean by that is when you're in these ranges, you note that when you broke down here, like look at Ferrari. And if you followed this for some time, this is another one we've just been banging around, but I bought it when it broke right into the support, and it just gave us this piercing pattern. Day 2 of earnings right into here. And all you did, and we're seeing a ton of this, so you're going to want to watch this, whether it's intraday or daily, they're going back to previous gap levels, and then they're rejecting again. And we saw this. So this was something that I bought, and then when it got back up here on a shorter term trade, I kicked literally like that day, and for no other reason but the gap fill. But you're seeing this all over the place. So when you're trading names like these like faster names, watch this name today and what it did. Opens up, completely collapsed. They just step away from the bid, drops down, right? Where are you by the end of the day? And it's not once that they're doing it. They're doing it all the time. You're going back to those closes. Now, whether or not that close holds tomorrow, I don't know. If I was to look at that, that's a huge liquidity grab to me. So it probably does hold that. I mean, one would argue that that's an enormous dragonfly. And then if you flip the top of that dragonfly, you're probably going higher. That somebody may argue that, right? That could be a really good argument. And the longer the dragonfly tail, the bigger the move usually is. So that definitely might be something that somebody might want to watch tomorrow. Of other interest out there, this ASST was something that I'm trading. I did quite well with it. I still have a position in it, disclosure, and I'm going to trade it for some time. When they get this influx of capital, it depends on the dilution, but there's some similarity here between this and that Octo trade. And Octo got funded. This didn't get funded yet. So I'm really curious how this is going to play out, quite frankly, how dilutive that deal is going to be. And if anyone has any information or comment on that, drop it in the YouTube comments because I'd love to read it. I have some data where I know where the warrants are going to be priced, but anything else that you have helps me show you guys like, hey, this is what I would do. I can always just give you more information, education to make it better. Other than that, you got to get through CPI tomorrow. You're predicting that move. If we take a look at crude oil, which we like to do, and just look at crude. If you ever wanted to see something fascinating, take crude oil and put it in a chart next to the CPI year over year, and it's like looking in a mirror. What you do is just go up to here and go August 1st, and then just drop a VWAP. And what you'll note is that the average price right there for August is going to be right here. So in general, you're about average to where you closed. You're not higher. And you're always doing this kind of thing, and I'll show you why. So if I go to July, and we'll find July right here. There it is. And if you go to July and then you go to the end of the month and you see that you're up, you're going to have the chances of that are a hotter print. So in other words, if the crude oil, and same thing with gasoline, if they're higher than the average, you're usually going to have a hotter print on CPI. It's just a really easy gauge to do. In here, they're telling you that you're probably going to be lower in line. The other thing that you can do with it, and they should be able to do it on this, is you can just kind of drop a volume profile and take a look at it and then go here. And what this will show you is the point of control where the majority is traded at. And then that will always tell you the same thing. Like, hey, on the contract side, where are these guys? And that tells you, because they overlay the cost to the consumer. And that's just another way to look at it. But let's get through those numbers tomorrow and we'll go from there. That is it.